Welcome to the Money and Wealth Show, brought to you this week by AmericanManganeseInc.com. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, the program that offers you opinions every week on business, the markets, and the economy. And this week, our special guest, just back in Canada after the winter in California, is Victor Adair. Welcome back. It's good to see you again.
Good to be back.
Another struggle down there in the desert for a few months. Victor, I'm trying to feel sorry for you. It's just not working for me.
Well, it was a great winter, Sterling, to be away from Vancouver and a great winter to spend in Palm Springs. So I'm happy I did it. It's just another decision that turned out to be a good one.
And you've learned some valuable lessons about the economy in the United States. I'm going to tap into those in just a little bit, but let's start right here in the Great White North. Nice to have you back. Did you see that election the other day?
Yes.
Here we had the Government of Canada returned after several minorities with finally a convincing majority and a brand new opposition. So you would think the markets, which love stability, would, the day after the federal election in Canada, Victor, breathe an enormous sigh of relief and go crazy. Well, they went south by well over 200 points. Apparently, rumors of interest rate increases in China trumped whatever relief was found by voters in Canada.
Well, I think going into the election, the market had expected that the Tories would win. It was whether or not they would have a minority or a majority.
Exactly.
Government. So the markets are always going to react when something different than what they expect happens. So there really wasn't much there, other than it's nice that from the market perspective, that the Conservatives got the majority. But you're right, that bit of news was trumped by events elsewhere. I mean, we had the price of oil come off pretty hard. Precious metals, commodities generally were weak. And the Canadian market has been a play, as it were, on the commodity boom. So the Canadian dollar, the Canadian stock market has gone up pretty much at the same rate as the broad commodity indices have. So we had a dip in commodities, and that very much trumped the local political news.
Well, and of course, the political news is nonetheless for many, particularly in the business community in Canada, no matter where, it is a great relief. And you're quite right. It was simply majority or minority, but I think the business community welcomes majority because, if nothing else, it means we get 4 years of relative calm in the marketplace. We don't have to worry about dropping another $300 million in another 18 months again, such as we've had to do several times in the last 5 or 6 years.
Well, I'm not sure we're going to have stability in the marketplace, but if that's your prediction.
Well, and this is a bad year to be making those kinds of predictions, isn't it? How about stability in the House of Commons? Would you go there with me?
Let's say they've got a majority government, and we'll see what they do with it. I wish them well. I think there will be events that will be happening outside of Canada that will have a big impact on the value of our currency and the value of our stock market that will be well beyond the control of any of the politicians within the country.
Well, and that's so true of events that are occurring as we speak around the world. We touched very briefly on interest rates, the potential for an increase across the board in China. We have the euro sovereign debt scenario that's not going particularly well. You pay a lot of attention to the European theater, and we see Portugal attempting to resolve its debt issues. Greece, on the other hand, fighting it tooth and nail. Victor, they were the first to be identified as having the biggest problem, and they haven't done a damn thing about it since, what, 2 years now?
Well, you know, I think I've spoken before on this show about one of my favorite themes, and that is that way more money has been borrowed than is ever going to get paid back. And that's playing out in spades in the European sovereign debt crisis. I mean, Greece, to my view, is well past the point of no return. If you have loaned money to Greece, you're not going to get all of it back. Okay, that's just as simple as it is from my perspective. They will try to dance around the issue, but that's really where we're at. And if Greece does not pay back the money, and for instance, there was an interesting election in Finland where a party there called the True Finns,
Right.
gotta love their name, basically their platform was not one red cent of our money is going to go to those profligate spenders. And if there is one European country, as I understand it, that doesn't go along with the herd, then the whole deal's off.
Right, right.
So we may see, I mean, lately, the sovereign debt crisis seems to have been set aside, and the euro is rallying against the U.S. dollar. It's
Yes.
almost like the U.S. dollar is the worst currency in the world. It's going down against virtually everything. But I believe that this sovereign debt crisis will come back into investors' focus, and when it becomes a problem, it'll really be a problem, and that'll show up in the markets.
Well, I saw a piece in the paper just today where the Greeks were offering over 15% return on their bonds to anyone who would want to buy them, and to an unsophisticated investor, a 15% return sounds like a pretty darn good deal. But they are, however, Greek debt bonds, and highly unlikely to remain unpaid in perpetuity.
Well, highly likely, actually, to remain unpaid.
Okay, right. That's what I meant.
Yeah, I know you meant that. I just think, really, whether you're looking at a market in the United States, like the real estate market or the sovereign debt market over there, or any number of other places around the world, we had an enormous credit boom that lasted for a generation. And terrific excesses were created during that period of time. And there will be a struggle as that credit boom has ended, and as the markets try, and the governments try, and the central banks try to deal with that. And there's going to be violence in the markets. There's going to be dramatic opportunities as well. But I think it's going to be the single biggest factor in the markets, that and the other aspect, the promise that have been made that aren't going to get kept. And that has to do with all the pension promises that have been made, and that's maybe a subject for another time.
Our special guest this week on the Money and Wealth Show, financial analyst and commentator Victor Adair. Lots more ahead. Please stay with us.
Always consult your investment professional before making any investment decision.
American Manganese Inc. has a world-class deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week is broadcaster and commentator Victor Adair. Always a pleasure to have him on the program. And Victor, you spent the winter in the United States, close to some very interesting economic realities. Obviously, you've spent many months dealing with the United States dollar. What do you think of the status currently of the U.S. dollar, and how do you see it playing out for the rest of 2011?
I think the short answer there, Sterling, would be that the U.S. dollar and the currency markets around the world has been getting thrashed. It's been popular to not like the U.S. dollar, so it's gone down against everything. It's gone down against some currencies more than others. The Australian dollar, for instance, has been much stronger than the Canadian dollar, even though in the world of currency trading we view them both as commodity dollars. But what I saw when I was in the United States is how cheap everything is down there compared to what it's like in Canada. And it was an experiment for me to go and live there for 3 months just to get out of the country and be someplace else. And it was very easy to go to Palm Springs. You know, they speak the same language and so on and so on. But what I saw was that food's cheaper. Wine is way cheaper, and that's important to me.
I agree.
Gasoline's way cheaper. Real estate is ridiculously cheaper than what it is up here. And I have observed that, and I've said to Canadians, you know, the Canadian dollar here at $1.05 has presented you with a windfall. Your purchasing power, and if you're a Canadian and you're going to buy something outside the United States, you're more likely to go, buy something outside of Canada, you're more likely to go to the United States than anywhere else.
Sure.
So your purchasing power has gone up hugely relative to what it was, and you personally didn't have anything to do with it. You were just in the right place. So I would suggest to Canadians, I mean, you don't need to jump all in, but buy something in the United States. If it's real estate, you're comfortable with that. You know, if you're just going across the line and buying gasoline and making those 4-hour lineups that we talk about.
Oh my goodness, and they happen every day now, with gas averaging what, 35 cents a liter cheaper? No wonder there are lineups right from here to the Atlantic provinces at U.S. border points every darn day.
Well, I have personally switched some of my net worth into U.S. dollars. I did it at a cross rate of about $1. You know, here it's $1.05. I mean, it may go to, I don't know, $1.50. I'd rather think not. But, you know, I just think that in terms of what you can do now, if you're a Canadian, I think it makes some sense. You know, we always talk about diversification in our portfolios, that thinking of stocks and bonds and real estate and so on. But how about diversifying your portfolio of foreign exchange? Instead of having all your assets in one currency, put some of your assets in another currency. And to me, the obvious pick is put a little of your money into the United States.
So even though it's a kind of a contrarian thing right now because the dollar appears to be sagging and it isn't on the popularity list very high right now, so this would be a good time, you're saying, to consider the U.S. dollar while we have the 5-cent advantage on the exchange and while the rest of the world is kind of looking down their nose at it.
I think so. That's what I've done. I'm not saying that this is the top of the Canadian dollar.
Right.
I have no idea. I can't predict the future. I'm just saying that I know what I can do at these levels, and it makes some sense to me to diversify my net worth in terms of currency exposure at this time and put some money into the United States. Or just, it's just as simple as go to your bank and switch some of your assets into U.S. money. I don't think you'll be really sorry.
And just to carry that whole thought about diversification a step further, what about these emerging markets, Brazil and Singapore and the Philippines or Peru or all of these other markets around the world that people are looking at and encouraging investors not to necessarily flock there, but at least have them on your radar because there are things going on in some of these emerging markets that some people can profit from.
The emerging markets have been hotter than the domestic markets. Let me explain it this way. When people are afraid, capital stays in the center. When they're willing to take risk, capital goes out to the periphery. At the periphery are things like making investments in countries you never heard of before.
Right.
Okay? And then when people get scared, that money just comes right back to the center again. I think we have been, for the last year and a half, 2 years, in a mood, on balance, where markets are willing to take risk after getting scared to death, okay, in the fall of 08, spring of 09. I'm inclined to think that that enthusiasm to take risk, which has boosted the Canadian dollar, boosted gold, silver, crude oil, and so on, stock markets, I think that's probably close to turning the other way. So the stock markets would weaken, commodities would weaken, emerging markets would suffer, and the U.S. dollar would benefit.
The U.S. dollar is suffering some right now because of this whole policy of quantitative easing, of printing money to buy American debt. They say that's really hammered the U.S. dollar on the international stage. And also the thinking is that it's inflationary, that it's created, and despite the fact that you say that it's much cheaper to live in the States, there are a lot of Americans who will tell you that they feel the economy is inflating. It's more expensive for them on a daily cost of living basis than it has been in a long time.
Well, food and energy prices around the world are going higher. I think that's part of the reason we're having protests in different countries around the world, and those protests may spread if we continue to see that. I think we've had this, depending on what time frame you want to look at, we've had this huge credit boom that happened earlier in our lifetime. We've had a dramatic correction from that. I think the central banks and the governments around the world are very aware of that, and they're trying to counter the natural deflationary forces that come from the contraction following a credit boom. What that means in a way is the poor people are struggling.
Yes.
Anybody who's trying to save money is struggling because you get paid nothing.
No, that's right.
And the folks that can borrow money and be aggressive with it, speculating, are doing well. So that's also part of the reason we're seeing protests in different places around the world.
I think that's the most frustrating part about this, and we need to take a break, but is this whole business of Ben Bernanke going on television and saying, well, you know, we don't consider groceries and gas when we consider whether there's inflation in our country or not. So guess what? There's no inflation in our country. And all of America goes, hello, Ben, we all buy groceries and gas, and they're both getting more expensive by the week. So how can you sit there, look us straight in the eye and say there's no inflation? It's crazy. Drives me nuts. It's one of those, it's just the way the Fed does business, isn't it? That's the way they choose to analyze the economy.
That's the way they analyze it. I just try to look at what I see going on and try to find an opportunity for myself, either to just sit and watch, or if I see an opportunity to actually step up and do something, I will. So making a little move and putting some money into the US dollar is one of the moves I've made.
All right, our special guest this week on the Money and Wealth Show is Victor Adair. Lots more ahead. Stay with us.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week, British Columbia financial analyst and commentator Victor Adair. Victor, certainly the big news story in our country this week was the election of a majority government. The big news story the world over this week, undeniably, the capture and killing of Osama bin Laden by U.S. Navy SEALs. You referred a few moments ago to the unrest in the Middle East, identifying the fact that those protests are not likely to go away. And in fact, you said they could escalate and into other parts of the world as well. Do you think that the takeout of bin Laden is going to contribute to a long, hot summer of protest in 2011, not only in the Middle East, but originating there?
That tough question, really. I'm not sure that Osama being killed is going to change the course of what I would see continuing protests. I think my first takeaway when I looked at it, when I watched the President of the United States announcing that this had happened,
right,
I thought to myself, for the first time, he looks a little tough, strong. And I thought that's going to play very well for him within the United States.
Domestic politics, yeah, you bet, yeah.
That's what I thought about that. But to come back to the protest aspect, we've had the beginnings of some protests in MENA, they call it Mideast North Africa. And I think at root, the cause of these protests has been the people, the working poor people, are sick and tired of what I refer to as the kleptocracy, the theft of the country's assets by their leaders, And that is, if you look around the globe, there's lots of places where if that's the root cause, you could expect that people might rise up. I understand that there are protests, we use that word in parentheses, in China, that the government there is trying to suppress this. The news of it getting out.
They certainly don't want people like you and I talking about it.
Well, it's when you are the top dog and you've been in charge for a long time and you're getting used to having everything your way.
Exactly.
You don't want things to change. And the people down below maybe are just sick and tired of the way you're running things. So that's when the protests get started. We have protests in the old days in this country, back in the 60s and all that anti-war protests.
Sure.
But, over there, the police didn't open fire on you with machine guns and tanks and over here, like they're doing over there. I think that we're going to see more of this kind of protest, and I think there's good cause to see more of it, and I think that's going to make an impact on the market.
Cynical speculators love protests like this movement across vast areas of Earth, because they get to jack up and play with and manipulate the prices of commodities, especially in the case of the Middle East, oil. And there are a lot of people who are quick to point to speculators as the culprits for this roller coaster ride oil prices have been on for the last year.
For a second there, I thought I was talking to Jack Layton.
No danger.
And I know that. I've known you for a long time. Speculators in the commodity market, that's where I'm familiar, okay. We have more money in the commodity markets moving things around than ever before in my lifetime. Speculators are definitely having an impact.
Right.
Okay. But they can drive prices up with what they're buying, and then when the buying ends and things go down, I mean, they're just as likely to get burned as anybody else. So the speculators are in there participating. I've been a speculator for 40 years in the commodity markets myself. I just noticed that the volatility in the moves is greater than anything I've seen in my lifetime, and I think it's because there's a lot more money in the market now than there used to be.
In just a few moments, our guest Victor Adair will have the final word.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Looking to advertise to targeted audiences? Online at talkdigitalnetwork.com or howstreet.com. On television, The Money and Wealth Show. And on radio, This Week in Money. To learn more about getting your message in front of our audiences, email us info@howstreet.com or call us 604-699-8600.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
And now, with the final word on today's show, here's our special guest, Victor Adair.
Well, Sterling, you know, I was saying about what I learned being in the United States, and I thought that it was a good thing for Canadians to take some of their money and put it into the States. Another subject that's dear to my heart is Vancouver real estate prices. And I've seen that the real estate prices here have really boomed, whereas in places in the States they're down by half and still falling. Mm-hmm. And of course we got a special situation here, but I think part of it, at least at the margin, and an important part, is this is an extension of the real estate boom in China. And I believe, as I said earlier, I think the commodity markets, the stock markets have had a big rally here for about a 2-year period, and we're going to go the other way. If things start to back up in China, as I think they will, I think you'd see the Australian dollar fall, for instance, but I think the Vancouver real estate market would be very vulnerable to any correction in the broader global market. So I'd watch out for that.
Victor Adair, where do we find you on the internet?
VictorAdair.com.
Well, there's a shocker. It's great to have you back in Canada, and thanks so much for making this program one of your first stops.
Glad to be back.
Our thanks also to Fritz and the crew here at Churchill's at the Holiday Inn in North Vancouver for the tremendous hospitality. I'm Sterling Fox for The Money and Wealth Show. See you next time.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.